diplomacy. So we would move into this some sort of like coercive diplomacy. Like Amina mentioned, like this isn't a regime that just has a leader and that's it. It has tentacles all throughout the country, and there may have to be some sort of diplomacy with the current structure that remains in place. So I think that this could last at least a week, according to that tweet, if not longer, if they can't get the current Iranian regime to the table. Also, Reed, if I could just mention that there was an article yesterday about the US SPR. I see a note in here about SPRs, and I just want to say that that note said that the SPR has not been that the US SPR has not, they haven't had any communication with the administration on releasing barrels. So that is not at the moment not an option that Trump has even entertained. I also want to mention about the China point is that China has been storing crude for so long that most of the storage capacity, even though we've had significant builds over the last year, that's oversupply lives in China. And so while they are in a good spot, they can continue to take Russian barrels. I think that's something to note is that if we need barrels onto the market, we would, because we wouldn't be able to get them through the strait, we would need to go to China.
Fair enough. And I'm going to maybe just to back to you as well, folks asking, you know, could OPEC, theoretically cover the supply gap if you saw loss of Iranian volumes very easily?
Well, it depends how big of a supply gap we're talking about, and it depends for how long. And any kind of immediate spare capacity is being held by two countries. It's basically the UAE and Saudi Arabia. So between the two, maybe you have around 3 million barrels per day. So that's the kind of immediate action that they could take with immediate spare capacity to that's available. But how willing they are to release it will really depend on how much they believe that it's going to be off the market. That's the other variable here. So yes, they are willing to jump into action if there's a need to, but it all depends on where we are in terms of the assessment of how long we think or they think those barrels are going to be off.
Fair enough. Let's quickly talk about LNG, nat gas. This is for anyone in the panel who may have thoughts about that side of things. Obviously, Qatar is a major exporter of LNG. Who may be impacted there? And I'll maybe ask you, come to you on this one with the physical side. Any thoughts on just impacts on the natural gas LNG side of things?
Yeah, I mean, we've seen reports that Israel is restraining production from their own offshore fields, as well as some energy tankers already stuck in the Gulf. So, yeah, I don't think there's much of a leeway here for anything but a really strong Monday opening for LNG spot prices.
Got it. And just a couple of other points on this as well. I think on the physical side, Qatar and the flows through the strait are about 20% of global LNG. And in addition, we are expecting a widening in the JKM TTS spread as Asian buyers try and pull volumes. We likely will not see a big upside pull on Henry Hub. That's what the team is expecting right now, just given the fact that LNG facilities are already pretty maxed out on the US side of things. Anyone else have any comments on the LNG natural gas piece? Okay, Amina, maybe come back to you. Some folks asking about potential of that we see Iraqi production come offline here. Like, do you think that Iran could look to target more Iraqi physical oil production infrastructure?
From the southern fields there are already reports that I mean, some production is being impacted. In Kurdistan, there are a number of Khormor, for example, they stopped production there for precautionary measures. So yes, yeah, of course there is a chance. I mean, Iraq is within close proximity here, and their facilities are also exposed to what's happening. So if we're talking about risk of supply loss, yeah, that's definitely a possibility to lose barrels from Iraq.
Got it. Michelle, going to come back to you. I'm going to ask you a price question, given you're the ex-trader in the room. Maybe just any expectations for the WTI Brent spread
Reed, that's just my favorite thing to trade. Yes. I expect, and again, we put this in our note on Friday for like trade ideas. When we get the spike on the open, I think we all know what happens. The producer comes in and sells WTI, and they sell the back end of WTI. So they'll sell deck 26, deck 27, deck 28, and because it puts pressure on WTI and not pressure on Brent, that spread really blows out. So I think that and deck 27 has nothing to do with prompt fundamentals, so that spread will blow out. So I actually really expect to see that blow out. But in the prompt WTI Brent, I don't know where it was trading on Friday, maybe like around -5-ish. I expect that the front to also blow out because the global market will be impacted by these moves through the strait, and people will be bidding up Brent to, like, especially refiners will be bidding up Brent to hedge their refinery exposure to supply. And the US market, because it's relatively contained, will be that spread just should also blow out. And the last thing I will say is freight rates always make that spread blow out. So if freight continues to grind higher, then I expect to see that spread continue to widen. But I think that one thing, if you're looking for like a day one trade, one thing that's going to be a fun trade is to watch the back end of WTI Brent, because it will just blow out just from producer hedging and not from any sort of fundamental outlook.
Makes sense. And come back to you, question around the Red Sea, the Houthis, any developments around the Bab el-Mandeb Strait? Is there any attacks there? Are you seeing anything there?
Not that I'm aware of, although admittedly, maybe I've missed some attacks in the past couple of hours. I think it's reasonable to expect a resumption of attacks in this choke point. I mean, the Houthis already declared their intention to do so.
Maybe Michelle, come back to you. Do you have any expectation on what do you think's going to happen with the Houthis? Are they going to, maybe try and attack Saudi? Are they going to sit on the sidelines here? What do you think?
Do I think they're going to try to attack the South? I think they're going to join in the fight. And again, like, I'm not necessarily sure there's like a real strategic plan. I think they will do whatever they can to make infrastructure in the region vulnerable, and whatever it is going to do to get oil prices higher. I think everyone in the region that's participating in the war knows that the Achilles heel of Trump is high oil prices. And I can't help, it's kind of like when he did all the tariffs and then he saw the bond market move and he adjusted quickly to the tariffs. I can't help but think that if he sees oil prices sustainably higher for like a week or two's time, like 90 plus, that he will change, that the strategy will change. So I think that the number one goal of the Iranian proxies or Iran itself is to strike Gulf infrastructure, because that's really where it will hit Trump. I can say that Trump did say last week, or when the war started, I guess on Saturday, was that just Saturday? Yesterday, that he said he's not worried about oil prices. So I don't know if he has something up his sleeve. I can't help but think, and I know this is a long shot, but there were reports yesterday that Russia had verbally agreed to some request by the US for a ceasefire. The Kremlin didn't confirm it, but I do wonder if there is a spike, we do see some of the Russian barrels move from sanctioned to unsanctioned. Again, it's just speculation, but in all of Trump's toolbox on getting prices lower, we already know the SPR is not an option. So I'm curious if he's not worried about oil prices, what his actual strategy is. And like Amina said, like the Gulf states, if they block the strait, the Gulf states really can't participate in supplying oil to the market if they can't get through the strait.
Makes sense. Let's just do a couple more questions here before we close it out. And on just some questions around European sourcing of jet fuel. Any thoughts on alternatives where they could pull volume?
Yeah, I think it's safe to assume now under all these circumstances, and also considering that Jamnagar USD jet and USD cargoes have already cleared in Europe after the kickoff of the European Union 18th sanction package, that Jamnagar, India become even more important for European security of supply in that environment. If there is a disruption to jet, which I think is almost a given, at least in the next couple of days, due to simple fact of geography, we will probably see more and more Indian barrels coming. And as we've seen already, this rather unwanted but viable passage of barrels will probably pick up pace in the next couple of days.
Thanks for that. Amina, maybe one more question for you. A lot of folks just asking, okay, we have spare capacity, but how much of that has to go through the Strait of Hormuz? Could it even get to the market? Do you have any thoughts on that?
Sure, there are alternative routes. I mean, there's the East-West pipeline for Saudi Arabia that has a capacity of 7 million barrels a day. The bottleneck really is the Yanbu port in Jeddah that might not be able to handle all of that volume, but it's a route definitely. So if you could just reroute it to Jeddah. Again, with the UAE, there's the Fujairah pipeline. So some of the volumes can get out. So you can have a portion of these volumes get out to the market. But I think regardless, Reed, the moment the market just gets that headline that, you know, the strait is closed, there's no more crude flowing and so on, that's when panic is going to set. And I think it's going to be less logical about looking about, you know, alternative routes. But for now, I mean, what's preventing the vessels, we do see the strait open, but what's preventing the vessels and why a lot of the IOCs are advising not to use the strait is because of insurance. The insurance costs are so high that no vessel just could afford or wants to risk going through the strait at this time.
Makes sense. All right, everyone, we're coming up on 40 minutes, so we'll cut it there. A lot of extra questions, couldn't get through all of them. Sorry, we'll try and get back to those who did ask questions, couldn't answer. Anyway, guys, thanks for joining this webinar. For those who maybe are not aware, we have a research product at Kepler. We are putting out research notes in real time on all of these topics. If you don't have access to that platform, reach out to sales@kepler.com. We are also hosting an Insight Forum, a research forum hosted by Kepler on March 25th in New York. If you're interested in that, you can get registered. We have links on our LinkedIn and elsewhere, or even just reach out to sales@kepler.com to get access to that as well. With that being said, thanks. We'll probably look to have some follow-up webinars here in the next few days, so stay tuned. But again, thanks everyone for joining, and we'll speak to you soon. Bye-bye.